Hi, everyone. Thank you for joining our session today on making data-driven investment decisions, key metrics to consider. I'm joined today by Joe, founder of LunarCRUSH, Karen, chief scientist, Johnson from Huobi, and Matthew, general partner at Fifth Era. The blockchain industry has changed dramatically. The USD value in DeFi protocols has increased more than 1,000%, and crypto funds are claiming 300% returns this year. But past the hype and ICOs of 2017, the types of blockchain companies being funded has changed amidst a pandemic and other world events. Complicating matters for investors in general are regulatory issues, and scams and enforcement actions can shut down or negatively impact these companies and blockchains. For digital asset investors, lower levels of liquidity can be challenging as compared to traditional markets. To tackle these new challenges and opportunities, our panel will discuss the data behind investment decisions in companies, funds, and digital assets. We'll discuss metrics investors use to evaluate blockchain companies, and on-chain and off-chain metrics relate to adoption, governance, and liquidity as they contribute to longer-term viability of an investment. I encourage you to look at our websites for more information on other metrics, companies we invest in to evaluate, and other metrics we use to evaluate blockchain investments. Before we dive into the metrics today, let's go through a quick round of introductions. I'm Karen, CEO and founder of Blockchain Intel. Blockchain Intel provides risk indicators for thousands of cryptocurrency providers and hundreds of millions of addresses across multiple blockchains. Our customers include anyone looking for, anyone trading digital currency, including exchanges, trading desks, and OTC providers. Why don't we go around the room? And Matthew, would you like to start?
Sure, thanks, Karen. I'm happy to be here. I'm Matthew Le Merle. I'm based in San Francisco. For the purposes of today, the most important thing is I'm an investor in Draper Goren Holm's new fund and also an advisor at the Venture Studio. Very excited to be here. But beyond that, I help run Xu, the world's most active early stage investor organization, and blockchain co-investors, where we're the leading blockchain venture VC. So we're LPs in all of the top blockchain VCs globally. And then because we will talk, I know about trading as well. I'm vice chairman of SFOX, which is the independent crypto prime dealer. So we actually integrate all of the compliant exchanges into a single order book, and we provide real-time streaming data on all of the trades occurring globally in those compliant exchanges.
Great. Let's move on to Joe.
Hey, Karen, everyone. Thanks for having me. I'm Joe Vezzani. I'm the CEO and founder of LunarCRUSH. We're social listening for cryptocurrencies. We provide an analytics and a research platform, and we have over 2,000 cryptocurrencies currently listed. And we look at social volume across places like Twitter and Reddit, YouTube to help figure out what is the conversation happening and what's happening in real time. So excited to chat with everyone.
And Karen.
Hi, Karen. Thank you. Happy to be here. I'm Karen, Chief Science of Innovesta. Innovesta is a company that allows investors to make smarter decisions with their investment. We serve the traditional investors as well as digital currency traders, and we have a multiply AI engine that provides objective and subjective views about different assets, such as companies or currency as an asset, and etc.
And Johnson.
Perfect. Hi, everyone. I'm Johnson. I'm Director of Research from Huobi DeFi Labs. Currently leading our research team to pretty much conducting data-driven industry research in order to provide a deep insights in the space. Huobi DeFi Labs is a platform for decentralized financial research, investment, and also incubation. Trying to build in the DeFi space. We aim to build a better financial ecosystem in collaboration with the global crypto and DeFi community. We've actually just launched the global DeFi alliances to bring together the fragmented crypto space and also closing the gap, the culture gap between the East and the West. Happy to be here.
Thank you all. Now, why don't we step back and start with the data and metrics that you use to evaluate which companies, blockchain companies in particular, to invest in, and how has that changed in the last year? So Matthew, could you give us some insight as to, for example, some early stage companies have talked about how now it's more important as compared to before to be able to show product revenue and financial projections, and something that is expected, a higher bar is expected of these earlier stage companies?
Thanks, Karen. It's a good question. Things have changed. When we first started getting involved as equity investors, venture investors in blockchain, probably about 2013, and my partner, Alison Davis, became chairman of the advisory board at Blockchain Capital. This was a new technology, only a handful of years in, 4 or 5 years in. And it's fair to say that just as we evaluate any emerging technology, an awful lot of it was on the prospects of what might be possible, but there was very few evidence that it would be possible. I think that we're now into the, I would say, the early competitive phase around the world, whether we're talking about protocols or the transactional layer, wallets, exchanges, custodians, transfer systems, and so on, or the applications that are building on these things. There are more than one competitor in every space. And so, as an example, we are investors in a host of different wallets: Uphold, Coinbase, Kraken, Circle, and so on. And they're now beginning to have to think about competing. And so for a startup, the data that we factor into our thinking as venture investors begins to shift. 6 years ago, are you a great technologist? Do you understand this technology? Do you have a vision? Can we meet you? Can we get references around you? Are you going to be able to get started? Today, 6 years later, why are you going to be the winning platform? What it blesses your team and your network, your community, and your project with more firepower than the other people have? Are you building upon what has just gone? So I'll give you an example. In the first wave, everyone was single purpose. We had crypto wallets for crypto assets. We had public equities wallets like Robinhood for public equities. We had, payment wallets like Venmo that were doing transactions. Now these things are all converging, and we have things like Uphold, which provide everything under one roof. So as an entrepreneur, the game has shifted. We care about who you are, just as we always do. Who's your team? What provenance do you have? Do you understand the technology? All those things are unchanged. But now you have to come also with a credible argument for how you're going to compete against a host of other well-funded and capable teams. And that definitely means the bar has moved into what we call the early competitive phase. I hope, Karen, that, the bulk of the other stuff to do with how venture investors make their decisions, you can read about. It's, there's tons of books on how VCs make their investment decisions. But I think that this shift in the time frame in blockchain specifically is really important for the entrepreneurs to understand.
Yes, and that makes a lot of sense. So thank you for that. Now, Karen, at Innovesta, are there particular metrics that you share, data that would help illustrate or help investors like Matthew?
Yeah. I think that Matthew touched exactly the point that and we see it from our customers, that there is a demand for to compare companies for investment. It's not just the company as an asset, but the surrounding of it, and what are the other companies that can compete from a technology perspective and from a financial perspective, and to compare itself to other companies. Our system provides evaluation on blockchains and other assets, and we believe that the world maturing into a need of hybrid views. We think and we see there is a shift where investors and procurement officers want to compare between the business capabilities of the companies. And it's beyond the technology. It's not just the technology like in the past, and we can provide it in our platform. And we also see more sophisticated and in how investors are looking at companies, and which is exactly what Matthew said before. On one hand, there is the openness of building back digital and blockchain traditional due diligence and the risk assessment, but also there is a way of bring innovation and blockchain and digital into it. For example, our customers want to know for how resilient each company to the pandemic, for example, or for a specific geographic. And this is more sophisticated than in the past, the questions of the investors in order to compare the resilience of one company to the other company is something that we can see it more now.
So this is a perfect segue to the next question that we have around how projects and companies might have looked promising, like you were saying before, Matthew, years ago, but don't take off. What data do you look at to evaluate a company's or a project's, so it could be a blockchain protocol, a project's longer term prospects, and specifically, how does adoption play a role? How can you understand or identify indicators of longer term viability? Are there specific on-chain metrics that are important? For example, when we look at blockchains, we look at transfers between addresses or blockchain accounts over time. What other metrics of adoption are important? Liquidations and order book depth and things like that. So Joe, Matthew, Joe Johnson, and Karen, please weigh in here.
I could start on that. I think it's something to be cognizant of, especially, as we've kind of gone through the progression of kind of the ICO phase and now move into the NFT phase and stablecoins last year. I think sometimes people forget that these are just startups, and sometimes startups fail 99% of the time. And so, a lot of times in our industry, people will say, oh, it was a scam. It was someone pulled the rug out. And yes, that has happened, absolutely. But a lot of these projects are just trying to accomplish and disrupt the financial industry, and they failed, which I think is an okay thing. And so I think we got to be kind of cognizant a little bit of that. But something that we look at LunarCRUSH is not, there are no earnings reports or 10Ks for a lot of these companies. It's what does your community look like? Kind of like what Matthew was saying earlier, it's community, and can you drive that community forward? Are they bought in on your mission? And so we try to kind of create transparency around what do the conversations look like online? What do the communities look like? And who's talking about these? And, a lot of times you see, especially when there's kind of a scam type thing going on, is you see a lot of these kind of fake giveaways, or you see a rapid increase in social engagement for a specific coin. And, you used to not be able to go back and say, well, did this project have a groundswell of conversation that's happened online over the last year, 2 years? Have people been talking about this? Or did this just happen all in the last week? And so in order to kind of create transparency and to protect consumers, we're out there trying to identify which communities do have that groundswell. And we think that's a very interesting way to look at our market that you would not look at maybe these traditional markets. And so, you have to create transparency, and you have to protect the consumer through different tools that are out there. And so, I think that we are moving into a different stage in our industry where, you're going to see a lot more faces on these websites, and people are going to be doing live streams and getting out there, because people will not invest in the long term in something that doesn't necessarily have a core good team, solid team around it, and the technology is good. Because like Matthew said, you can't just put something new, a new technology out there and think it's just going to rule the world. You have to have, and I think we've seen it in the DeFi movement, you have to have an experience that's better and transparent and clear. And I think that's why DeFi is going to continue to run, is because there are a lot of really good projects that have awesome interfaces and awesome teams.
Yeah, and also I also like to add on that is that I think one of the most important aspects that I would consider is that to look into the core capability of a blockchain project. can bring to the ecosystem actually. So blockchain, or more specifically crypto world, should not be in a direct competition with the centralized space. So otherwise, it's called a CeFi running on the blockchain, centralized finance running on the blockchain. So looking at the DeFi space at the moment, I think from Huobi DeFi Labs perspectives, we've seen a fair bit of projects or company are trying to putting centralized finance ecosystems elements into the DeFi space. So that's why we think the current DeFi ecosystem is so-called CeFi running on the blockchain. In terms of the future, I guess in the longer run, and also in a longer term prospects and viability, there are a few things that we are actually looking at the moment. So first of all, adoption. Adoption does play a key role here. A blockchain project with limited adoption will not last in a longer term. So at the end of the day, the industry is building products and services for users like us to participate in this Web 3.0 ecosystems. So in terms of indicators of longer term viability, I believe an early stage blockchain project, firstly, you need to find a clear product market fit where it can actually tackle an industry pain point in a very unique way. So once the product market fit has been discovered, the blockchain project needs to have a strong growth hacking mindset in order to sort of, I guess, market itself and generate sufficient market traction to gain adoption. And I do believe network effect can play a critical role here in terms of the longer term viability. Taking an example for projects on the Ethereum blockchain, specifically, gas bet in the last 30 days can be one of the most direct way to tell the state of adoptions. Again, if a blockchain project spends a minimal amount of gas, then obviously the state of adoption is quite low. Of course, if you're talking about blockchain projects built on the layer 2 network, then that's a completely different story.
I could just build on that, Johnson. I agreed with what both Joe and Johnson were saying. As a 30-year Silicon Valley investor, there are metrics that we would use that would be different for whether it was, say, an enterprise software solution v. a B2C consumer-facing solution. And even though decentralized software development is different, I think as a team, as an entrepreneur, you should begin with those same metrics. So as Johnson says, you're going to have a funnel, and you want to build a big community. You need a lot of traffic, but then they've got to use your offers and they've got to monetize. And you really need to think that through if you're a B2C solution. Conversely, the enterprise players, we had Ripple speaking just a few minutes ago, that they have different metrics. You know, how many big banks do they have? He said 300 working on RippleNet. How many of them are engaging in the specific payment processes and are jointly developing with them, and when are those products going to go live? It's sort of a different thought process, different angle. It is. If you're going to try and launch a new blockchain protocol right now, it's a different issue again. How many developers can you get to begin to develop on your platform? We have top 10 protocols by value with essentially no development occurring on them. The value is illusory. And conversely, you get something like Polkadot launches, and Gavin and team have done a great job to engage a lot of developers, not as many as on the Ethereum blockchain or the Bitcoin blockchain. However, there are a lot of Polkadot developers working on Polkadot right now, and I think justifiably it's gone into the top 10 by market value because of that. Now, it's all ahead of the curve. We don't have too many live applications on Polkadot, so it's still bringing the future into today's valuation. But at least a key success factor for an operating system or a protocol is how many developers do you have, and how good are they, and what are they building, and when will it go live? And I was excited to see that Gavin and team thought about that and really engaged the developer community early. So I hope that's useful, Karen.
Yes, and so I want to shift to another topic around communities, and this is a different aspect of communities, and that is really governance. There have been a lot of scams hacks and enforcement actions, like BitMEX recently indicted for criminal wrongdoing, and companies like Salt Lending having to return ICO funds. I just did a presentation this morning on the travel rule and how that's being enforced now. Does the risk that a company will be shut down or fined in some way impact investments? And what metrics do you use to safeguard against that risk? Also, are there things like audits and risk reporting that you may be doing that's useful for your customers?
If you don't mind, let me just, sorry, I know I just finished, but it was probably 15 years ago that we did a lot of work and launched a bunch of reports about keeping the internet open. And that was at the time when Congress here in America was thinking about bringing in new regulation that would limit the ability of the freedom of use of the internet of that time. And that work that we did demonstrated a truism, which is investors get chilled by regulatory uncertainty. It's one thing to be a speculator. Speculators can benefit from the ups and downs and the volatility created by uncertainty. But long-term investors do expect some degree of view of what the regulatory environment will be. And you don't want to suddenly find that your hard won ground is just written out from under the company by a regulatory shift. So regulatory uncertainty can chill investing in long-term equity-based investments. I think that traders, conversely, and we're going to talk about trading, I hope, in a minute. We've got Huobi here after all, as well as SFOX, but traders actually can greatly benefit from regulatory uncertainty because they want the volatility that occurs when, one day everyone thinks something's going to happen and then the next day everyone thinks something else is going to happen. So it's a double-edged sword and it means different things to different people.
I can touch on something just really quickly as someone that's building, in this space and, is now a little bit over a year old. We have customers in over 180 different countries, and thinking about building a company and what the regulation looks like and where to be headquartered and how to navigate each different regulation is a very interesting and timely exercise to be doing. And I know that I'm not the only CEO that's forced to think about that in our space because we have a truly global industry that we're building in. I would say, especially in the United States here, it does become cumbersome to launch as quickly and to stay ahead of your competitors and some of the people in the industry that don't have necessarily some of the handcuffs that you have when trying to build. And so, I do see that, until there's a kind of even playing field, that many companies will probably end up moving to other countries and kind of working that way. And it'll probably just be an easier thing for a lot of CEOs to do that.
I can see, Karen, you wanted to add something. So if you want to talk about that and then dovetail into the trading discussion and how we look at volatility of the markets and liquidity, specifically, and the metrics around liquidity.
We'll do it shortly. Yes, it is a high risk space, and I think that good companies must be legit and have a good solid need they solve. There need to be a way how to provide the business risk of each company that you want to invest. It can be by report or by as well as external topic line for a COVID or geographic or any other risk that specific for you. And assessment needs to be agile, combined, and to be compared. The comparison, I know that I add it again, but the ability to compare is very, very important when you have a high risk space.
Okay, great. So moving on to the question of trading. So I know we have a little bit of time here. For centralized exchanges, understanding accurate transaction volume has been important. And it's important, especially as exchanges have overreported because they're incentivized to overreport actual volumes. We have found wide discrepancies between what's actually reported and what is on chain. Now, for DeFi, The value locked in the DeFi protocols has been used, but there's also been questions here of double counting. So what do you use and what do you find to be important metrics for liquidity?
So let me have a go at that as well. So I'm changing hats now. So Vice Chairman S-Fox, the leading independent crypto prime dealer in the States. We combine the top 20 exchanges and over-the-counter forums, and all of that data is available to anyone in a live feed. You can put it into your API, and it's historical, it's live, it's scrubbed, and it's all in the same format. And we would say, don't wait for people to report their data, get the data in real time. I mean, if you're a serious pro trader, you need a pro trading platform, and you should be getting your data streamed to you in real time, and you should be making real time decisions. So we don't really care that much about what exchanges say they've done in days or even weeks later. We care about what's happening in this moment, in this second. And a lot of the trading algorithms are looking for very short-lived, opportunities, spreads and arbitrages that are gone like this. So it's real-time data. You need to get it from the largest exchanges in the world. And ideally, your API is integrating it into your own algorithms, equations, offers, and products and services if you are an intermediary. Decentralized finance is a whole different conversation. It's exciting, it's new, it's unstructured and disorganized and fragmented, and it's going to be a while before I would hazard to say how much of the information we're hearing is solid and real and how much of it is bots and auto traders and other things. I think it's fantastic, but I think it's going to be at least a year or two before we really know how much of it is real and how much of it is not. But I think most of the investors listening to this right now, you need to have a pro trading platform. You can't just be paying the spreads and the fees of going to a retail wallet, without mentioning any of them, and losing a large portion of your value opportunity in fees and spreads. Johnson, I know Huobi must have a strong point of view on that.
I don't. So first of all, I'm not really a professional trader, but I just want to add on that a little bit on that as well. So in terms of from the Huobi DeFi Labs perspectives, again, as you said before, the DeFi data is quite complex, and it's in a quite early stage in terms of data structure. So I'd actually consider multiple metrics to gain a comprehensive understanding of the situation, rather than looking at a single absolute number to make a judgment. So for DeFi, I don't really have a one-size-fits-all metrics for you, but I look into different metrics, including total value looked, though it being sort of a question for double counting, but combining with such as utilization ratio of the lending protocols, on-chain data, etc., to give you a bit of an overall picture on what's going on in terms of the DeFi ecosystem. Hopes that helps, Karen.
Yes, and I think our time is up here, unfortunately, but I would encourage you all to please visit our websites, contact us afterwards. I know all the panelists here have great thoughts on how investing is changing in 2021 and what metrics you will want to consider.
Thank you.